but we expect that further research can be developed in this area. So just starting, I have just a few words about the CCYB. You may be aware the counter-cyclical capital buffer was one of the key responses back in 2010 to the global financial crisis. It was part of the Basel III Accord. In Brazil, we introduced the standard in 2015, and today its rate is set on a quarterly basis by the COMEF, the Financial Stability Committee here at the Central Bank. The CCYB design was supposed to, it is designed, the capital buffer is designed to accumulate, be accumulated, be activated or increased as you wish, as cyclical risks increase, build up over the cycle, and to be released when in times of stress. Back then, in 2010, in its original design, absent those risks, absent signs of imbalance, the rate should remain at the 0%, which is the lower bound of the range of possible values for the CCYB. And we refer to that base rate as the neutral rate. In Brazil, it is zero. And more recently, the international experience has strengthened the case for a more proactive, to start accumulating this releasable capital. You will see us regulators calling the CCYB as the releasable portion of capital, the releasable capital, the cycle-adjusted capital, so on and so forth. And there was this case to start accumulating this parcel before in normal times, and the idea is that if you have releasable capital available, when you release and this policy proved to be effective in helping banks absorb shocks and also sustain the credit flow. So, but as I mentioned before, the original design implies base rate of 0, and there is it introduces a kind of inertia that we will discuss here, and for several reasons. And because of this, there is this discussion of moving towards a more proactive approach and to having positive neutral rates in our framework. So I will move to invite Mara. Mara, she has an extensive experience, a deep understanding of different designs, different types of calibration and implementation challenges in the CCYB at the European level. So Mara, over to you. Thank you.
Well, good morning to everyone, and many thanks to the organizers for inviting me to this panel today. I don't see the slides on the screen, but just to start, well, I mean, my name is Mara Pirovano. I work at the European Central Bank, and it will be a pleasure today to talk to you about the challenges of a positive neutral CCYB, bringing out the European perspective. The usual disclaimer applies, is my own views and do not necessarily reflect those of the ECB or the Euro system. Well, I can just quickly start before the slide come up. So just well, to start again with what is a positive neutral CCYB actually. This was actually one of the main challenges we encountered when starting approaching this topic. And well, what it is not is actually a structural use of a buffer that was designed to be countercyclical. But rather what it is the early activation of this countercyclical buffer in an environment where cyclical systemic risks are neither subdued or nor elevated. So what is called like a standard risk environment. Well, at ECB, we have strongly supported these early activation approaches, and indeed to avoid a bit at the confusion with the semi-structural use, we have shifted towards naming it as early activation rather than positive neutral, which gives indeed a bit more of a structural delineation to this buffer. So we have conducted extensive work on this topic. On the slide that I was supposed to show you, there are several links to publications, both more policy-related and academic publications, which, if you're interested, well, you may have a look. But most importantly, together with the European Systemic Risk Board, we have launched a work stream back in 2024 that has included more than 20 members from national authorities in the European Economic Area. And this work stream has produced a joint report, which was published in January 25, and on which the insights I will present to you are based. Now, for the next slide, I would really need a visual because it's a visual slide. So I'm not sure how to. Sorry about that. So, well, the slide is about well, try to improvise a bit here. It's about the current implementation of the positive neutral CCYB in the fantastic, thank you, in the European Economic Area. No, that was actually this one. So, at the moment we have 18 countries that have adopted such early activation CCYB approach. And actually, already from this slide, you can spot some of the challenges I will delve deeper into later. So first of all, you see that some countries have a little red dot there, and these red dots are the target positive neutral rate they have announced, while some other countries don't have those little dots. Another feature you see is the heterogeneity in the rates that are applied across countries. So the rate nowadays from 2% target rate to a 0.5 target rate. So, well, one of the main challenges in Europe is indeed the heterogeneity. So the 13 countries that have introduced an explicit target rate did so because they considered an explicit target to ensure predictability of the rate, transparency vis-à-vis the banking sector, and clarity of communication. Other 5 countries instead opted for an early activation approach without an explicit target rate to remain a bit more flexible, and they didn't really see a need to have an explicit target. And well, the heterogeneous calibrations come not only from a policy preferences across countries, but also from the different calibration methods for these target positive neutral rates that have been used. And well, in this table, you see that quite a variety of methods have been implemented by national authorities. However, despite most authorities rely on some modeling framework, ultimately expert judgment still plays a key role. There is also some heterogeneity regarding the objectives for adopting such early activation approaches, which, well, sometimes actually they coexist. And the main motivations regard timing and amount. So on the timing side, authorities mentioned that this approach is very useful to ensure the early activation of the CCYB, a timely activation due to, for example, data lags that may delay the identification of risks that will then result in an activation of the buffer, and also a more gradual buildup of the buffer. So the earlier you start, then the more gradually you can build it up, and then can have more limited consequences on the banking sector. And regarding the amount, well, the motivations are mostly, well, ensuring a greater availability of buffers that can be released in the event of a shock, and that was a big lesson from the COVID-19 pandemic, and increasing the banking sector's resilience against a wider spectrum of potentially large shocks. So, well, we said that it's a buffer that one should activate when risks are neither subdued nor elevated, so a standard risk environment. But a challenge is, okay, what is a standard risk environment? Well, it is a situation where risks are neither excessively high nor excessively low. And one can best identify it as the late recovery period after a downturn or the early expansion phase. And so the picture here shows how the buffer would be intended to be used over the cycle, with well, an early activation happening in a situation where the economy is recovering, banking sector balance sheets are also recovering, and, well, overall banking sector conditions are favorable. Then, well, the build-up can be gradual towards the target rate, and then a further build-up to, say, the peak rate would be envisaged when risks really become elevated. Well, and also challenges happen when to assess how to then release the CCYB while either remaining above the target rate. So, for example, when cyclical risks recede, or releasing the buffer completely when really losses start to materialize, or you have high expectations, the losses start to materialize to allow banks to continue lending. Another challenge that was mentioned by quite some authorities in our workstream is the lack of clarity in the international and EU legal framework. So the Basel Committee on Banking Supervision expressed explicit support for the use of a positive cycle-neutral CCYB in a newsletter they published in October 2022, and they even published in 24 a range of practices in implementing positive neutral CCYB, reviewing the experience of countries that have implemented it. However, this is not yet enshrined formally in the Basel framework, which for some countries constitutes a bit of a challenge. And specifically in the EU, some jurisdictions lamented a lack of clarity in the EU legal framework regarding the possibility to implement a positive CCYB rate when risks are not yet elevated. And that's basically due to different transpositions of European directives into national law. Another challenge that was extensively discussed regarded overlaps with other macroprudential instruments. And this is perhaps a more EU-specific element, as in the EU, we have the systemic risk buffer, whose objective is to prevent and mitigate macroprudential or systemic risks, which are not covered by the CCYB or other buffers, such as the buffer for other systemically important institutions and global systemically important institutions. Conceptually, this kind of vague definition of the systemic risk buffer open the door for using it also for objectives that the CCYB could address, like, well, a positive neutral CCYB would address, namely increasing resilience against exogenous shocks. So, and these actually resulted in several countries calling for more clarity in the definitions of these different instruments that would really disentangle their objectives and therefore avoid overlaps. Finally, many countries discussed the importance of communication. So communication is key not only when you want to introduce a positive neutral CCYB framework, because this helps obviously fostering acceptance by the banking sector and the public, and it also helps steering their expectations regarding the setting of the rate and its intended path over time. But it's also very important when, for example, you would release a CCYB, because then it's key to communicate very clearly what is the timing and intended path of replenishment, because this would encourage banks to actually use the released capital to support lending during a downturn. And otherwise, they would expect maybe the rate to be replenished too early, and then they wouldn't really use the buffers. And actually, many authorities did engage in extremely clear communication, especially through, say, press releases, the financial stability reports, and policy strategy papers. So, well, to conclude, well, the ECB believes that, early CCYB activation is a very valid approach that actually enhances the counter-cyclical properties of the CCYB. Maybe greater consistency in its application across jurisdictions would be beneficial to enhance transparency, predictability, and cross-country comparability, and also improved clarity in the international framework, and EU legislation would really help to clarify the objectives and the design and the release mechanisms, so to really foster a bit more harmonized use, which would also help the banking sector to understand. And finally, clear communication is really an essential element that has to be really taken into account when thinking about introducing a positive neutral CCYB strategy, and also throughout the use of the buffer in time. And with this, I conclude. Thank you very much.